Everybody, and welcome. My name is Tom Lyons. I'm the head of communications and content here at Gen2, and I am the host of the AMC Summit this week. And with no further ado, I'd like to introduce my guest. I've been waiting a long time to do this, and I'm looking a lot forward. So my guest today is Luca Bianchi. He's a partner at Kellerhals Carrard and widely considered, as far as certainly from my point of view, as one of the, if not the utmost expert on the subject of AMCs here in Switzerland. So, Luca, welcome.
Thank you. Glad to be here. It's a pleasure.
So, before we get started, you've been around in this business and also dealing with AMCs for a very long time. I think we'd like to start with the usual. Just give us some of your background, and then I want you to talk about sort of the history of the AMC from your point of view, and then after that, we'll get into technicalities of what an AMC is.
Yeah. So I'm a partner at Kellerhals Carrard, also the head of the banking and finance team. Kellerhals has about 380 lawyers in Switzerland, 700 people overall, and our practice group has about 64 lawyers. So my first touch point with structured products was in '08 at an internship with Lehman Brothers in Zurich. And then the bank defaulted, and I was looking for a new job, which I found at a big law firm. And so, as a junior guy that knew structured products, they told me I'm the structured products specialist now. And ever since then, I've helped issuers issue their products with the whole legal documentation. And after '08, if for a few years, because of the financial crisis, the market was pretty dead. But then around 2011 and 12, I really experienced a pretty strong increase of these new kinds of AMC products. So in the beginning, I helped our usual clients, the banks, to establish these AMCs on their product documentation. And then over time, you saw more and more of these standalone SPV issuances that we see today a lot in the market, that were basically issuing the same products as the banks, but without bank guarantees. So it was a really rapid and dynamic rise of these AMCs from my perspective.
Okay. We're going to get into the topic of the SPVs and the on-balance sheet, off-balance sheet later in the webinar. I'd like to go back over that ground just a little bit again, and to get a sense of a deeper sense of what changed in the market over time. Because you started just doing it. It's just really, it was sort of a bank product, right? And then it got more the user base, let's say, widened out. And also, I believe there were historically some changes in Switzerland on the regulatory side, which helped the AMCs here.
Well, in the beginning, you had the situations that many relationship managers of large banks, at some point, they couldn't get higher salaries, so they would get out of the banks with the clients and then continue to manage these portfolios. But sometimes they would have, let's say, between 1 million and 50 million AUM for a product. And in that area, launching a fund is not usually not economically viable. So you need another wrapper. And with the AMCs, they could basically continue to work with the bank they had before as a custodian, but be the manager of the product. And back then, you would need a license if you had below 100 million AUM. So you could basically just start outside of the bank with the same business. And then the new banking regulations came, Basel III rules, that made it very costly for banks to have certain types of assets on the balance sheet, especially illiquid assets or crypto. And that was another driver to then issue the products without the bank guarantees. And the new Financial Institutions Act came in 2020, which basically then required asset managers to get a FINMA license in any case. But the structures remained unchanged. You had these basically debt financial instruments, the AMCs, being issued either by a bank or an SPV, managed by someone outside of the bank today, typically with an asset management license.
Okay, then why don't we get to the $1 million question here? Can you explain in simple terms for somebody not familiar with them, what exactly is an AMC? It's a type of structured product, obviously. Maybe go into just the basics.
So legally, it's a debt instrument like a bond. That explains it easily. So you can never issue equity as an AMC. That would likely be qualified as a collective investment scheme. But for debt issuance with a market standard issue documentation, it typically qualifies as a structured product. And sometimes when I talk with people outside of finance, they don't understand what AMC is. I basically tell them it's like a tomato. You have the tomato here, you sell it over to there, same thing. So that's maybe the most simplest explanation.
Yeah, okay, but what makes AMC special is the active part of it, right?
Yeah, so economically, it
yeah.
gives you the same performance as an investment fund without the investment fund regulation. And that makes it challenging from a regulatory perspective historically. So in the very old days, there was a time when FINMA issued a statement and said uh, all products of this kind qualify as collective investment schemes and are basically illegal. But in the market, these products already existed, and the market basically was in disagreement with this view, and the pressure becomes so intense for FINMA that they basically withdrew that statement. And after that, a new era started that I like to call it the rise of the AMCs, because then you had regulatory certainty, and there was a vast increase of the numbers of AMCs that were issued after that.
What exactly was that ruling? When was it?
Well, you find it online. It's probably from the time around 2005, 2010, somewhere that around. So it was even before my time. But when I started as a lawyer, it was basically the beginning of the new era. So the first couple of times we helped banks with AMCs, they was still like being discussed, and you would always get this question, yeah, but what if it qualifies as a fund? And in the last let's say 15 years, probably there were several occasions to get rulings from FINMA, and it always qualified as a structured product so far. So nowadays I'm rather relaxed when it comes to this questions, unlike 15 years ago.
Okay. And what's the big advantage to me by not being regulated as a fund? Why should I care?
Well, you can issue with a higher time to market, basically immediately if you have a platform already in place. You may need a prospectus, but you do not need a FINMA approval. And also, you don't have to bear the costs of the ongoing FINMA supervision with annual reporting and audit and all that. I mean, there's audit requirements for 6 listings, but it's not a regulatory audit like for a fund for a fund with FINMA.
Okay. And maybe interesting at this point would be to sort of get into the discussion about use cases. I mean, you've seen, I don't know, hundreds or many AMCs, and I want to get a sense of what they're being used for, what people are putting into them, and how the different types of underlyings maybe are structured a bit.
Mm. So you have the different generations of products. So number one, on balance sheet with the bank. Number two, like the name of your company, Gen2 is without the bank, and then you can talk about three, four, maybe when you look at tokenized AMCs or illiquid AMCs, liquid underlyings. So this is an ongoing evolution. There will always be something new and better with when innovation is going on. And as regards to the underlyings, they depend strongly on the
Luca, you've frozen.
banks. So so every time the crypto price goes up, and it has basically with interruptions, but been going up very steeply over the last 10 years, then new crypto products are issued. So that's very cyclical and correlates with the price of crypto. And the other trend is kind of a convergence with securitization transactions. So any kind of illiquid assets like real estate, debt, private equity, could even be something uncommon like art, or timber, or basically any kind of real assets. So you see a lot of these real world assets at the moment in the market. That's a big trend, I would say. And then there's also a project to tokenize AMCs. So basically, I could then send you AMC that I purchased from my iPhone to your iPhone, a peer-to-peer, without market maker or intermediary in between. So from where it started, where you would have just your house bank as issuer selling you the product and you would keep it, it's quite a few steps now to basically have no limitations regarding underlyings and also regarding how you transfer it wallet to wallet.
Okay, but like, I'm trying to get a sense because I think when we spoke before, when you started doing this, the underlyings are mostly liquid assets, right?
Yeah, so banks they typically don't want illiquid underlyings in the products because if the underlying is illiquid, you don't have a market price, you have an evaluation. So if that portfolio is evaluated X and then some sort of credit crunch crisis comes along, you may have situations where the evaluation is made again, and then all of a sudden, one day to the other, you have like a 30% drop. I mean, this is like an extreme example, but the 30% drop of the value of the product. And if you have like a wealth management department with high net worth individuals with asset management agreements with you as a bank, you don't want this situation to happen. And outside of the banks, you have a broader variety of clients. You have, if you're specialized asset managers, clients that come to you because you know this specific type of asset class and they know the risks involved and basically just want to have exposure to an asset class that they cannot get anywhere else. And in that setup, you can do a lot more uh, products than within a very rigid private banking framework.
What's the weirdest thing you ever got asked to put into an AMC?
So the weirdest thing, which I actually I didn't do it because I thought it's not
Do it.
serious, but was race horses, like in Argentina. It doesn't smell right to me, and I'm not going to advise this client. I don't know if it was serious or not, but I mean, I also like try, or no, I don't try. I only do reputable projects, you know, because you don't want to get involved with some, I don't know, like, yeah, like semi-serious type of transactions.
Yeah, okay, but that said, wouldn't you agree that there's or would you agree that there's been an increased interest in alternative assets and in
Yeah, I mean,
what's
that's an understatement. That's
in
one of the biggest
non-bankables and yeah,
mega trends of the last 10 years, for
yeah,
sure.
okay. So what are the kind of things you're seeing there that are interesting that you would do?
So
Yeah.
the biggest trends in terms of asset classes I saw in private debt, um, real estate, um, as alternative assets.
Okay. And what kind of projects?
Yeah, AMCs and similar projects.
No, I mean, in terms of what kind of real estate stuff?
Well, one was with like single property homes in the US, and another one is with Swiss real estate color questions. But
Mm-hmm.
if you have Swiss investors, for example, that's not the deal breaker for real estate.
Okay. All right. I wanted to go back. Have we and start this question of the difference between the on balance sheet and the off balance sheet, and the whole question of the SPVs. So what's the difference there?
So if a bank needs to and it affects, it has a revenue, capital costs rise due to the banking regulation, so the bank needs which costs. And the second component is accounting, like so when like let's say a large Swiss bank has a bank guarantee to the SPV, it consolidates the SPV regulatory wise and accounting wise. But if that is required, the products are more expensive for the investors because then you need to charge for the capital costs that you have as an issuer. If you have no bank guarantee and the bank does not control the AMC, so it's like standalone, the same product is cheaper for the investors if it's issued off balance sheet than whether than compared to when it's issued on balance sheet from a bank. So there's pretty extreme examples. So I've clients showed me like what the difference actually mean when you can basically on some platforms you can choose which whether you want this or that. So then you see the same terms of the same products that prices are different for the products.
Yeah, because the underlying costs are higher.
Yeah, yeah,
Okay.
exactly.
Okay. And you also said to me that there's sort of a convergence now between AMCs and ETPs a little bit, or there's similarities, but there's also important differences, right?
I would say so. So ETPs are a very established product. They're not ETFs, so not like funds, but you have collateralized products that also allow for listing with Swiss Exchange, for example. And this type of structure, basically the same one, you can use also for AMC offerings. So you also have an SPV, you also have collateral. And the difference to the ETP is that an AMC, it doesn't necessarily need to be listed, so it can be unlisted, but also if it's unlisted, you don't have to comply with all the 6 regulations in terms of what underlyings are eligible. So 6 only accepts liquid underlyings generally. So an unlisted AMC is more flexible than an ETP. And the convergence is basically that ETFs, ETPs, which were historically a passive product, now there also exist active ETPs. And an active ETP and an AMC is economically pretty much the same. So you could even call the ETP AMC in some cases. So there's like more and more overlap between these two product families.
Right, on the listed side, if I understand correctly.
Also on the unlisted.
Okay.
So an ETP can be unlisted. Some issuers do that. They may call it differently, but it's the same product legally from a legal perspective. And so that's basically my point. They are so similar now in some cases that you can not even distinguish them anymore, which is normal for convergence. I mean, that's what it means. It becomes more and more similar until it's identical, right?
Okay. And can I use an AMC for retail investors? And if so, what do I need to understand and do?
You can. The requirements regulatory wise are you need a FinSA prospectus. So the FinSA is the Financial Services Act. The prospectus needs to get approved by a prospectus evaluation body, and you also need a key information document for the investor. So these are the, well, actually, it also has to be collateralized. So that's another requirement. But if you fulfill these requirements, and that's pretty easy to do, then you can issue to retail investors. Yes.
Okay. Do you see a lot of that?
Yeah. Yeah. More and more. So it kind of depends on what like what the asset manager wants. Often the asset manager says he doesn't need that because he has only his asset management clients and that's
Right.
enough to launch the product. Um, but so if it's more like, let's say, from a crypto angle or tech angle, like a product with an investment theme that is appealing for retail investors, then you see clients with these FinSA prospectuses that want to be able to have a public distribution of the products.
Okay. So I'm curious if I called you up one day, Luca, and I said, "Hi, got my little asset management boutique here, and I'm interested in doing a product on this on a strategy, and it's mostly or I just let's here I'll call you up. How's that conversation going to go? Like you're an independent, you're the legal advisor, right? What are you going to ask of me? What do I need to be able to tell you? How are you going to take me through this process?"
So when I structure AMCs, the first question I always ask is, where are the investors domiciled? Because that is important from a regulatory perspective. So if they're in the EU, you also need to comply with EU regulations. For example, in terms of prospectus for retail, that would mean you need to register the prospectus in the EU. Let's say, or in a like connected country like Liechtenstein.
Yeah.
Yes, so then that means rather than submitting it here to the six SER, we would have to work together with the Liechtenstein law firm and get it approved by the FMA. So I've done that in the past and it works well, but it's basically like another route from a legal perspective. Um, the next question is where do you want the SPV to be, the issuer? And there you see three routes. One is the SPVs in Switzerland. That is perfectly fine to me. To me, that is the easiest from a legal perspective. The other one is I want it in a strictly regulated country like Luxembourg. So some bank clients say we don't deal with any other jurisdictions. We want Luxembourg. We have like an internal compliance policy or whatever. And the third route is you have a less regulated country like Guernsey, Jersey, Cayman Islands, and you establish the SPV there. And you see all of these routes
And
in the market.
they're all equally fine, I'm assuming.
They're equally fine, yes. They all have advantages and disadvantages. Tax considerations may be a factor, or type of asset class that is favored in one country and maybe less favored in another. So this is basically whatever the client, our client, I mean the asset manager wants, or the issuer, we will do that.
Okay, and I know you're an expert here in Switzerland and don't necessarily you have the expertise outside of Switzerland, but I'm going to ask you anyway. Is there anything you can say about how AMCs as a product, the structured product, are regulated in different jurisdictions? I'm thinking, I mean, in Europe,
Yeah, I mean,
The UK, it's like that.
I have some insights because I worked on projects with non-Swiss law firms together, and so last thing I heard from Luxembourg was basically, or EU in general, you need an independent benchmark calculation uh, for public offers. So that means that's a licensed entity that calculates the composition or the value of your product. And that's basically one intermediary more that you need and that costs. Uh, but if you have that with certain limitations, as far as I know, you can issue AMCs that are more like kind of active indices in the EU as well. And these are different in the way that in Switzerland you just have discretion, full discretion of the asset managers, and also in non-regulated foreign countries where you basically don't have a benchmark calculation in between, and it's more like closer to a real asset management agreement.
Yeah, maybe we can get into that a bit. So, coming back to Switzerland, so I set up my AMC, and I have basically full discretion then on how the how the certificate is managed, how the underlyings are managed, and what I'm buying and selling, and how the portfolio is managed, right? So, is that really full discretion on my part, or do I have
Um,
limitations, or
it's yeah, I mean, there's normally some investment restrictions in the AMC documentation,
the
also a
term sheet?
descript yeah, also description of the strategy, and those are your limits. You need to comply with whatever the product documentation says. So if it says you have an active private equity strategy and nothing else, you cannot like all of a sudden buy real estate or something like that. I mean, you can, but then you're legally liable if there's a damage. So the agreement between under Swiss law, the agreement between the SPV and the asset manager is still an asset management agreement. So if you breach that agreement, you can be liable for the damage vis-a-vis the SPV as the asset manager.
Okay. But if it works out well,
Well, then nobody's going to sue you, most likely.
all right. No, I know we talked about this before. I'm curious about that part. Okay. Um, I wanted to talk about um, there's two things left I'd like to talk about before we get into the questions. One is the look ahead, and one is the tokenized AMCs. Maybe let's take the tokenization part first, but that is kind of looking ahead in a certain degree. But you've mentioned that at the beginning, and I know you're quite excited about the prospect. So tell me, what is where do AMCs and blockchain and tokens mix, and what's the advantage?
So to tokenize a structured product legally nowadays, it's actually not that hard. So the issuance documentation is pretty much the same. You have more risk factors, but you also have a wording that basically allows for the issuance of register rights, so the basically DLT security, as opposed to book entry security, or even both in one base prospectus. And so this legal part I've done many times, and it's not that hard. But where clients then struggle sometimes is to have a wallet that actually can be used by the investors and also by the issuer. So basically the bottleneck is not the product; it's the wallet. And the other difficulty is that if you want banks as distribution channels for tokenized products, you have many banks that are not yet able to actually deal with that technology on their end. And then somebody has gonna have to distribute the product. If you can do that yourself, great. But if not, then yeah, who's gonna buy it?
Yeah, but that begs the next question, right? So why would I want it to tokenize?
Well, you have still the benefits of the peer-to-peer transfer that you don't have with the book entry security, and you have the benefit that the tokenization is a big hype topic and innovation where you can position yourself, and with traditional products, you compete with every major bank of the world, and it's a tough market as a new kid on the block if you don't have some competitive advantage.
Okay. Great. So how do you see this market evolving, the AMC market specifically evolving? Where's their niche? We know that the market's growing, and if anybody's interested, again, we're talking with ISP tomorrow, 2 p.m., to go over their report, and there'll be more sort of hard data. Although super exact data is a bit hard to come by, but estimates these days talk about AMC market in between $1 trillion and $2 trillion, most likely. Where do you see it going? Looking at your practice and maybe what you've been through, and where's the niche and where's the role here?
So my perspective is we're all trying to help the investors to get exposure to some kind of asset at the end. And that means no matter or the way these assets develop and the growth of these asset classes, that's the driver on why you would buy a certain type of AMC, apart from the skill of the asset manager. So alternative assets have been booming because the interest rates are low and there's not much else you can do if the stock prices are really high and bonds pay hardly any interest. So I think this trend is going to go on with the off-balance sheet AMCs as long as the interest rate environment stays similar, and it is basically a need to invest in alternative investments to get any kind of performance at all. And even if that changes, they still have a valid place in every portfolio, just like as a kind of stabilizer or maybe less correlated part of the portfolio when compared to liquid equity or bonds.
Okay. And what do you say is the sweet spot in terms of the size?
Between 1 million and 50 million. So that's where you have the real advantage compared to a fund in terms of cost of the product.
Cool. Great. Well, we're here at 42 minutes, and I thought maybe we could turn to the questions. Let me see what we've come in. We've got a whole bunch of stuff coming in. So I think you already addressed this, but maybe to go back again, is the position as clear in the EU? I'm assuming as opposed to Switzerland.
Well, that I can't say. Like you said before, I don't advise on EU law.
Okay, so you don't want to get into that on an EU thing. Okay.
No.
Okay. So do the AMCs hold the physical asset, or is it a derivative product? So it is a derivative product, right? But maybe talk about how the AMCs are going to be structured. Let's say I'm doing fine wine or paintings or even real estate.
The AMC is a derivative product, but the question is probably more on whether the hedging is done with a derivative or physically. Like with ETFs, you can do both too. And the AMC, so the AMCs that I see, usually the issuer actually holds the underlyings, but not in all cases. So some are synthetically hedged.
All right.
So you may even get collateral in the AMC for the hedging that are not the assets that the AMC actually invests in.
Okay, cool. Another one here. It was mentioned that a portfolio manager license is required to manage an AMC. However, I'm aware of several cases where entities registered only as financial advisors are effectively managing bank-issued AMCs. Could you please clarify the regulatory requirements in this context?
Yeah, so the regulatory requirement is if you dispose over financial instruments, then you most likely qualify as an asset manager. Some assets do not qualify as financial instruments, like crypto, for example. So speaking, if it's not a financial instrument, you don't need an asset management license. But so to kind of be on the safe side, normally I tell client if it's borderline, just get the license, and some just don't want to hear that, and maybe try to find another way. But the other way would have to be you have an asset manager with a license, and you have an advisor that does not make the investment decisions itself. Investment decisions, you don't need the FINMA license. And this is what the law firm tells you. And then there's what's happening in the market, where you may have also some borderline cases or cases that actually shouldn't work like that. Most likely. So you have to look at the individual product and manager or advisor and understand what is he actually doing, and is it a regulated activity or not.
Okay. The next one came in here, and I can also take a shot at part of this, but why would you put crypto as an underlying to an AMC versus directly investing in crypto? Is it mainly the tailor-made characteristics of a structured product? So just from my point of view, first of all, you can reach investors who don't have wallets, and who aren't crypto natives. So that's one of the things. That's what we see a lot of in our business. And tonight we'll be talking about that in more detail when Signum comes in. Do you have anything to say on that subject?
Yeah, I mean, still a major part of the wealth of the society is distributed with people over 50, and they may just not be familiar or comfortable with using a wallet. You also have situations where banks, when they see that you buy crypto, let's say with your credit card, they will terminate you as a customer, throw you out. We've seen that with some clients in the past years. And last but not least, if you have an active strategy, maybe with derivatives or leverage, you may actually have a much more profit or losses too if it's actively managed compared to a direct investment.
Right, and but you can also do more sophisticated.
Yeah, you may have algo trading strategy that has a track record, really profitable, or just generally much more know-how with an asset manager that also has incentives to make profits with the product than you have if you just buy a Bitcoin on Coinbase and hold it till the end of your days.
Okay. What is the difference between a CLN, a credit-linked note, and an AMC? Can the issuer provide a loan to the borrower, if, for example, for infrastructure? I'm assuming that's the question. Can the issuer of an AMC provide a loan?
Well, AMCs, depending on what investment strategy is, typically don't provide loans. So that would be like a direct lending type of idea, so not the typical AMC. And yeah, with a credit linked note, you just buy an issuer risk that is not a part of a normal AMC. So it's a different product type in the derivatives map.
So somebody's asking about the fiscal perspective in the EU and in Spain, and I'm assuming that's something that's not your
Yeah, I'm not the right
that's
person
not
to
your
answer that.
okay. But
Sorry.
we'll see if we can get an answer for that also for our report to a certain degree. And again, also Gen 2, we're not we don't do we don't provide regulatory tax advice. But here's one. You talked about ETCs. I think you meant ETPs and AMCs, but not mentioned the economic part of it. I assume that to reach a break-even point, you would need more assets in the ETCP than you would need in the AMC. Is this assumption correct?
Yeah, I mean, so to me, it's not about the products, it's about whether you have, let's say, an existing platform that is up and running that just issues one more product, or if you set everything up from scratch. So if you set everything up from scratch, then you need more assets under management to make the costs economically viable. If you have an issuance platform that issues 100 AMCs per year, and then you make one more, that's not gonna cost much. So if clients don't expect to have much assets under management, I often just tell them go to platform XY and do the product there. It costs you nothing. If I set up everything for you from scratch with other service providers, yeah, then that's gonna cost. And I mean, it kind of depends. Do you just want to manage your own product, or do you want to be an issuer that can scale the issuance business? It's just two different kind of business ideas.
So in that sense, even though you're talking we're in the million to 50 million range, so smaller than funds, if what I'm going to be scaling is number of products, then I want to go with an AMC.
Well, if you, let's say, to make it concrete, if you want to manage a product with 1 million assets under management, don't set everything up yourself. Go to a platform that helps you. You pay a reasonable
Like ours.
fee.
Yeah.
You're gonna know how much that is,
Yeah.
and then go for it. If you have structuring needs that maybe are not met by existing platforms, you want to scale, you want to maybe sell the business someday, then we can talk about setting up a whole platform.
Okay, great. So I've got two more questions here. In the meantime, I'm going to add a link in the chat for everyone if you want to register for more of our AMC Summit sessions. In case you haven't had it, that's there in the chat. That's the sign up for the whole program. Next, second to last question is, what types of assets or strategies are currently the most difficult to securitize, and where do you see the greatest innovation over the next 12 to 24 months? So again, we're looking ahead.
So difficult. It's probably difficult if you have a regulatory limitation. So when you have, let's say, residential property in Switzerland and you have foreign investors, that's most likely not going to work, because you have the limitations on foreigners buying a Swiss residential property in the law. And other than that, if there's no regulatory limitations, you can use any kind of asset that you want. If it's not sanctioned or anything like that, war material is problematic and regulated as well. But if none of that applies, you can use any kind of asset that you want. And in terms of what's the next thing, I think Swiss real estate or real estate in general, but more for Swiss investors, that's a really solid idea. I think let's say the sustainable finance ESG trend is not as hot anymore since the US doesn't care about ESG anymore. And so what I'm looking at now is AMCs with stable coins as underlying. I found that quite interesting, and maybe some insight. But SIX, for example, is not really versed with stablecoins as underlyings yet. So there's discussions whether can you then list the product or not. So this is kind of ongoing, but I think that would actually be nice to have some stable coins in AMCs, and for unlisted AMCs you can already do that.
Yeah, and again, the point being, you're going to reach outside the crypto bowl for investors, basically.
Yeah, I mean, outside of the crypto area, it's hard for me to say what the next big thing is. If I only knew that, right?
No, I'm saying that.
But,
Yeah. No, what I was saying was that the point is, why put stablecoins in an AMC so I can get to more investors?
Well, because you Yeah, I mean, you have a strategy that the investor would not be able to access without that,
Otherwise.
with a direct investment. Yes.
Right. So here's one actually I skipped over. It's an interesting one. Can you list for investors investing in an AMC can you list the risk for investors investing in an AMC compared with a fund if they're different?
Yeah. So the risk, if an SPV defaults, um, it's not a segregated portfolio. Let's say the SPV is under Swiss law, so that means all the assets of the SPV would be in the insolvency mass and subject to the whole default proceeding with the insolvency authorities. And in case of a fund, that is different. So there, the assets of the fund would be segregated to the benefit of the investor. So if the fund defaults, the investors would still get the assets without all the costs of the liquidation being deducted.
Okay. Is there a restriction to where an AMC can be marketed based on where the investment advisor is based, if you know?
Not on the AMC level, but the advisor or manager is also subject to regulation. So in some countries to offer products, you need a branch, for example. So there we're again with the question, which country is it and how is the manager or the distributor regulated in that country? And that needs to be checked basically for every single country where you plan to have investors and offer the product.
Cool. Hey, Luca, we're almost at the hour, and I think we're going to stop it there. I'd like to thank you very, very much for coming today. Sorry we had a bit of technical issues here in the middle. Looks like that was more on my side, so I'm going to fix that for the next one. And it's like I said, I've been looking forward to doing this for a while. So, Luca, thanks very much. Thanks also to all the people who showed up today, and I hope this won't be your only AMC Summit session. Hope to see you in some other ones. And with that, I'd like to say, yeah, thanks and goodbye.
Thanks for having me. I'll
All right.
probably see you tonight.
I'll probably see you tonight. I saw you
Yeah.
sign up for it. All right.
All right.
Goodbye.
Bye. Thank you.